Hi guys, welcome to my YouTube channel. And I'm Felix. And if you're new here, it's your first time here, please like, subscribe, and drop down a comment so that we can improve on what we're delivering and rendering to you. Welcome to Learning Unit 5. Welcome to Learning Unit 5 as we're going to be talking about a few things which are stipulated on Learning Unit 5 for your FAC 1503 course so that at least you find it easier to go through the things. So if you are listening to this audio, please make sure that you have your study guide with you. You must have your study guide with you. So you're gonna find the study guide on Telegram groups. You're going to find the study guide from UNISA. You're gonna find the study guide from Telegram groups. Go to Google Telegram groups, FAC, and you're going to find the study guide. I cannot publish the one that I have here on this platform because I'll be in violation of copyrights, and let's not go that direction because the video will be flagged, turned down because of copyright violation. So I'm assuming and I'm hoping that as you're listening to me, by now you have your Learning Unit 5 in front of you, preferably the 2022 version is in front of you, and we're working together as we go down to Learning Unit 5. So Learning Unit 5 speaks about a lot of things that I'm going to break down for you and simplify it for you so that when you go through it on your own, or when you go through it with your e-tutors or whoever is going to be assisting you, you're not going to have a problem. So the introduction is mainly talking about the ledger entries, right? So we did a video previously. This is the fourth video, so I'm expecting and I'm anticipating and hoping that by now you would have listened to recording 1 all the way up to recording 4, and now gradually you at recording 5. So at recording 5, we now hear, then they start off by telling us about the subsidiary journals and what they are used for. So they explained it, and I explained it again in Learning Unit 4 as just for a revision for yourself. You can go on page 4 and actually see what it is used for and the type of entries they went in depth on the transactions that they are going to be using or the transaction that they are going to be testing you on. If you're still uncomfortable with the subsidiary journal, I recommend you play back the fourth video, and after playing back the fourth video, come back to this page 4 of Learning Unit 5 and make sure that you try and understand, okay, this goes to where, this goes to where, this goes to where. Okay, so in accounting, we're going to have a T account. If you can quickly go to page 5, right? We're going to have a T account, and your T account is always supposed to be in balance, meaning you're going to have a debit side on the left hand side. As you're facing it, on the debit side is going to be or left hand side or right hand side, depending on how you're going to look at it. But as you'll be facing it to the left, you're going to have the debit side. To the right, you're going to have the credit side. Remember, you can go by this. Assets are always going to increase on the debit side, decrease on the credit side. Liabilities are going to decrease on the debit side and increase on the credit side. Capital is going to decrease on the debit side, it's going to increase on the credit side. When I got to uni in UNISA, when they were still doing facet classes on the weekends, my tutor gave me a very easier way of going around it. He just said, draw the name, date, click. Then from then onwards, he just explained. So it stuck with me, and I made a video for it for you. If you then are interested in grasping it, you can go and play back that video until you understand the basic accounting equation, the T accounts. I spoke in depth about these things. But just for the purposes of those ones who just don't want to go there, remember it's a T account. So your T account always has to be in balance. Your T account always have to be in balance, meaning that the left hand side has to equal to the right hand side. The same thing that your accounting equation speaks of, that it has to equal to the right hand side. So how do you go about balancing a T account? That would be your next question. There is a video that I made, but for the sake of those ones who don't want to go to that video, when you are balancing a T account, it is quite important, or it is quite important for you to first calculate, okay, which one is the bigger one? Because if you go with me to page 7, we have a business bank account that is given there. Then for 10 seconds, just pretend you can't see that is 160, 160 on both sides. This account, it has capital. We have capital on the left hand side. We have capital on the left hand side. We have client's control on the left hand side. And we also have interest received on the same left hand side, as you can see on the left hand side. So because it's on the left hand side, we have equipment for 100,000, we have wages for 20,000. So we are going to pretend and stop right there. Stop the reading right there, right? So you want to balance a T account. How do you go about it? So for them to then get those figures, the first question you have to ask yourself is, okay, of the left hand side and the right hand side, which side do I find is bigger? Right? Which side do I find as bigger? Which is the bigger side? So it's clear for us all to see that definitely the debit side is going to be bigger than the credit side. So we then take the balance of the bigger side and put it as the balancing figure for both ends. Meaning, if you add everything, it's going to be 160. So meaning the T account always has to now equal to 160 on both sides. That's what they have for you there. Meaning that they then went and put 160 on the debit side, 160 on the credit side. So how much do we have short on the credit side to make the 160? That's why they went on to say a 160 minus the 100 minus the 20 to get 40,000. So when they got the 40,000, 40,000 becomes a balancing figure, right? And if you balance on the credit side, your opening balance is going to be debit. If you balance on the debit side, your opening balance is going to be credit. But I do have another video which talks about strictly about balancing a T account. So you can go and play that video there, and it will help you a lot, and it will help you understand what these people are talking about when they are talking about balancing a T account. It is not so complicated. It is not so sophisticated. So for people who are not really into accounting, when you guys come across the word trial balance, you tend to panic. You tend to panic and you think that there is something magical that is happening there, and there's something overcomplicated that is happening there, and you can't do it yourself. Really, trial balance is the easiest part of accounting. Trial balance simply means a list of balances. So meaning the accounts that are going to be in your general ledger, the list of them, that list gives you a trial balance. Trial balance is just there to test your debit or credit if you credited correctly. Right? Remember, for every debit, there is a credit. For every credit, there is a debit. So if you did that part correctly, you can easily have your trial balance balancing. But if you did it incorrectly, you are not going to have that part balancing. So you don't have to really stress much about the trial balance because it's just the list of balances. It's used as a test and as a check to see, okay, did you apply double entry correctly? So if you apply double entry correctly, you shouldn't be worried about your trial balance. It's not going to be a problematic entry. Then we have adjustments and closing off, right? So remember, when you are closing off, all your expenses, they are closed off to your profit or loss account. All your expenses are closed off to your profit or loss account. All your incomes are going to be closed off to your profit or loss account. You don't close off assets and liabilities, please guys. You don't close off assets and liabilities. They continuously have a balance brought down, balance, an opening and a closing balance, right? You can't say you had assets of 10,000, then next year you are starting at 0 again. If you did not sell, we assume, as the going concern principle speaks about, that you're going to be continuing the year from the 10,000. So remember, your income and expenses, they are going to be closed off to your profit or loss account. Closed off, I mean you are going to move them to the profit or loss account. That's what we mean by closing off. You are going to move them to the profit or loss account. When you move them to the profit or loss account, that is when you then are going to understand, or that is when you then are going to determine, did you make profit or not? Because you now have to balance what they call the profit or loss account there. Right? Remember, fees, they increase on the credit side, right? So if you're going to move them, the first thing that you're going to be doing, you're going to have a debit entry, right? So go with me to page 35. They have fees in the credit side of 80,000. So if you are going to close off that fees account, you have to move that fees to the profit or loss account. So how are you going to move it? You are then going to debit that fees account by 80,000, meaning 80,000 on the left, 80,000 on the right, it is equal to nothing. So now you've moved it to the profit or loss account. You then go to the profit or loss account on the next page, and you see that fees on the credit side. That fees will now be on the credit side. Your expenses are going to be on the debit side of your profit or loss. So remember, your incomes, they increase on the credit side. So meaning in the profit or loss, they're going to be on the credit side. Your expenses increase on the debit side, meaning they are also going to be appearing on the debit side. How to balance off a profit or loss account? Remember the same principles. Which side is bigger? Is it the 80,000 on the credit side, or is it the 1,000, the 6,000, and the 6,000 on the debit side? Clearly it's the 80, meaning we have to balance to the 80, meaning we are balancing our expenses, meaning our expenses are less. So if you're going to be balancing on the debit side of the profit or loss account, like in this question, it shows you made a profit. If you have to balance on the credit side, it simply shows that you have made a loss. So they're going to speak again about those statements, the preparation, the statement of profit or loss. So profit or loss statement is only going to have your incomes and expenses. Statement of changes in equity, we're talking about your movement in capital, right? Then you add your profit for the year. Then you have your statement of financial position, is going to be your assets and liabilities, owner's equity. Then you're going to have cash flow. We have to record the movement of cash. Then from then onwards, we have notes, which are going to be explanatory notes, which help you understand the financials better. So please do yourself a favor and go through this chapter. It is something that you really are going to enjoy. It's not going to take you a lot of time. And if you have any problems that you struggle with, please do let me know in the comment section. Remember to like, subscribe, and keep it moving. All the best with your studies. Thank you.